Did you notice? Am I the only one? Let me know in the comments below if you noticed. Did you notice how uncomfortable Jerome Powell felt and looked in the presence of Donald Trump? I think Jerome Powell despises President Trump. I think he doesn't like President Trump at all. They don't like each other one bit. You could just tell by the body language. I think it's one of the main reasons the Fed is not cutting the Fed funds rate right now. Guys, most people really don't have a clue about what's coming, what's about to happen. The Fed just held rates steady, the Fed funds rate steady, for like the 5th straight meeting in a row. And it's not really because inflation is out of control, right? I think inflation is under control, but I think they may be preparing us for something bigger, something that the Fed is not really saying and not really going into detail right now. My question is, what does the Fed actually know that they're not telling us? What should we be preparing for now, right? Could it be something bigger that the Fed is not saying? Because when you deal with the Fed, you always have to sort of read between the lines, because the Fed is never going to come out and say exactly what's going on, because the Fed is a propaganda machine. The Fed has to make sure, because they know that what they say is going to sway markets, right? What they say could sway consumer sentiment. All of a sudden, everybody could be down and out and don't spend money because of what they said. So what the Fed says is very, very important. And they won't say things out loud that probably should be said out loud quite often, right? So there's some signs going on that I think we need to be aware of, but there's also some questions too that I have for the Fed. Why aren't they lowering rates right now, right? There's tariffs. We know there's tariffs and tension going on around the world, but there's also a lot of political pressure. Could this be the reason why the Fed is not lowering rates, just strictly because of political pressure? In my opinion, the Fed is keeping the rates the same and not lowering them, not because of policy. That's what they're telling us, that it's the policy. They're looking at all the data. But I think it's deeper than that. I think the reason the Fed will not cut rates right now has more to do with power than it does policy. Because when you look at all the numbers, and I'm going to go over some of the numbers, when you look at all the numbers right now, the Fed probably should be lowering the Fed funds rate, right? But instead, the Fed is refusing to lower the Fed funds rate, which makes it feel like it's more about power instead of policy, right? What is it that Jerome Powell and the Fed chair, Jerome Powell, what is it he's not telling us as consumers, right? We don't want to get caught off guard and not pay attention to some of this stuff going on, because it's really important. So just yesterday, the Fed concluded its 2-day meeting that they have, right? They have 8 meetings a year. They've concluded their 2-day meeting, and they left the Fed funds rate between 4.25% and 4.5%, right? That range. The Fed funds rate is always a range. Now, this is the 5th meeting in a row that the Fed left the rates the same and didn't change them. We were all anticipating that by now the Fed would have lowered the Fed funds rate. They haven't done it. So my question is this more of a stance they're taking, trying to gain and control some power, or is it really based on policy? So let's talk about the numbers real quick. First, inflation. Inflation, we know, has remained slightly above the core PCE inflation that the Fed wants and has been targeting for the last, 2 or 3 years, 2 years. They've been saying we want to get the core PCE inflation down to 2%. That's our target, 2%. Well, it's been 2.5 years and it hasn't really come down to 2%, right? Right now, the core PCE is around 2.8%, and that's 2.8% year over year. That means stuff is increasing in price at 2.8%, basically, right? That's obviously above the 2% range they want. Now, GDP, right? Gross domestic product. Q1 of this year, there was a slight dip in the GDP. Part of that was because businesses were gearing up for these tariffs that were coming, right? Now, Q2, the first reading of Q2's GDP showed that it was roughly around 3%. And I say roughly because there's always more numbers coming in, and they give us readings, a different reading for each quarter in 3 consecutive months. So we got the first reading of Q2 recently, and it showed we were growing at about 3%, which is higher than the dip that happened Q1 of this year. So GDP is looking pretty good. It's looking okay. And then another core reading that they look at in terms of their numbers to come up with this policy to raise or lower the Fed funds interest rate is unemployment. Well, we know that for the past year and a half or so, unemployment has been at an incredibly low rate, right? In the lower fours. Right now, unemployment is at 4.1%. So the labor market, although it's showing some signs of breaking down a little bit, the labor market appears, based on the numbers, to be good, to be pretty solid at this point. Yeah, we know there's pockets of layoffs here and there. We know that perhaps wages are not increasing as much as they were. We also know that perhaps new non-farm jobs have been decreasing a little bit. But overall, the unemployment rate has stayed pretty steady. And we also know that the unemployment rate is not quite totally 4.1%. There's some funny ways that they figure out the unemployment rate that makes it look a little lower than it is in reality. But for the most part, the reading it's given us is a pretty solid 4.1% unemployment rate, right? Job growth remains fairly healthy, again, although it's dropped off a little bit. But my question is, should we be preparing for something? I mean, when you take all those numbers in totality, and I know the Fed looks at a lot more than that, but when you take those main numbers that were fed into the public, they look pretty good. What is the Fed saying to us by saying, nope, we're not going to lower the rates right now? What are we missing, right? Their policy, the Fed's policy, traditionally in the last several years under the current Fed chair, Jerome Powell, their policy has been pretty restrictive, right? Usually being a little too late to react to what's going on around us. Right now, they're talking about, and they mentioned this quite a bit when the meeting happened, tariffs, potential for tariffs to have a potential bad outcome on the inflation. We haven't seen that yet, right? We haven't seen, now don't get me wrong, there's some lag time that's involved. But for right now, we haven't seen this major impact of tariffs on prices and on inflation like they said it would happen. I think tariffs on India was just increased and announced a couple of days ago. You got tariffs on Brazil, right? You got tariffs on Korea. And the Fed has come out and said, hey, these tariffs are putting some type of pressure, upward pressure on the cost of imports. And we haven't seen it yet, but it may be coming. That's kind of what the Fed is saying. And that's part of their reasoning that they're giving us for saying we're not going to raise the Fed funds rate just yet. Now, remember this, guys. If the Fed goes in and lowers the Fed funds rate, it's supposed to incentivize us consumers to go out and spend money. That's the idea, right? And so part of what the Fed is saying is that we don't want everybody out spending money right now, because then this 2%, this 2.8% inflation definitely won't go down to 2% like we want it to go, right? So the Fed is basically saying their expectations of inflation is continuing. It remains exactly where it's been for the last 4, 5, 6 months, which is elevated, higher. They're expecting some type of inflation based on the tariffs. And so they're saying if we're expecting some type of inflation, higher inflation based on the tariffs, we're not going to add to it by lowering the Fed funds rate. The Fed is coming out saying basically we want to see a sustained period of cooling inflation. Now listen, it's easy to argue that 2 years ago, about 3 years ago, 3 summers ago, I think the summer of 2022, I think it was, we saw inflation at 7, 8, 9%. So it's easy to argue for the person that says the Fed should be cutting the Fed funds rate. It's easy to argue that you've already seen 2 years of sustained cooling in inflation. So if you've already seen 2 to 3 years of sustained cooling of inflation, why are you not cutting inflation at this point, right? That's the big question. That's the question I have. But the Fed is saying, hey, we've got some instability happening. Not just based on tariffs, but we also have some instability in terms of wars and things going on around the world. And I think the Fed is saying, but they don't want to say, that we have instability based on the president, based on the executive branch, based on the president's administration. Because of that, we have some tensions that's making us a little nervous to cut the Fed funds rate right now. See, they haven't really specified that because they're supposed to keep this non-political stance, right? The Fed is not supposed to be political. But I think part of the Fed not reducing the rates right now is them saying too much instability or too much potential instability based on the leader, the president right now. I think that's part of it, but they won't say it. Now, you got your stock market, which I haven't talked about, but the stock market has been a little jittery based on these tariffs as well, right? Because more and more tariffs is not necessarily a good thing short term for businesses. So you see these tariffs happening and you see the stock market reacting less favorable for investors, right? But hey, right now to date, we're in late July, early August. Right now, the S&P 500 is up 8 or 9% for the year. Matter of fact, let me tell you exactly what the S&P is up. Year to date, the S&P is up 8.02% so far. So the S&P, while it's not super duper high at this point, the S&P has reacted pretty favorably overall year to date. We haven't seen the S&P with a big major sustained pullback, right? So we haven't seen this unfavorable reaction to tariffs from the market that has lasted for a long period of time or months on end, right? At an 8% return for the year, if we average 8% for the entire year, that ain't all that bad. That's almost right on average over a 20-year span. It's not like the stock market is telling us bad news at this point. 8% is pretty good for what some would consider to be a spooked market because of what's happening with these tariffs. Now, let me say this too. What happened just yesterday was you had this rare dissent amongst the FOMC, the Federal Open Market Committee. That's the committee of the Fed that votes to increase the Fed funds rate or lower the Fed funds rate or keep it the same. So the FOMC in their meeting, they had two dissenters. And it's made up of like, I think 10, 12 or 14 different governors, Federal Reserve governors. They had two of them that came out and said, no, we should lower the Fed funds rate, right? That was Christopher Waller and Michelle Bowman. Both of them voted for a rate cut. That's the first time two governors dissented from the majority since 1993, right? You're talking over 30 years. That almost never happens, but it happened just yesterday. Both of them basically argued that slowing momentum and job risk justifies we need to go ahead and lower the Fed funds rate. Now, both of those are Trump appointees, right? But here's the deal. The Fed Fund Chair, Jerome Powell, is also a Trump appointee from back in, I think, 2017 or so. When Powell gave his speech to America yesterday at the conclusion of the meetings, he said basically, hey, we welcome debate. But at the same time, that didn't change the outcome. But you're talking about a level of disagreement at the FOMC, on the FOMC, that hasn't happened in decades. So that sort of highlights the tension between the timing of this whole thing. And it tells me this: people that are out here that think the Fed should lower the Fed funds rate right now, they're not far off, right? They're not some anomaly that's happening, some one-off somewhere. It's very possible that the Fed is waiting too late to lower the Fed funds rate. Now, another thing that the Fed funds chair keeps doing in the last really several weeks, month or so, is he keeps reaffirming out in public the Fed's independence, the Fed's non-political stance, right? He keeps coming out and saying, listen, whenever you keep hearing the Fed say anything, there's a major reason why they're saying it out loud in public. Again, the Fed is a propaganda machine. They very carefully measure what they say out front, right? So the Fed chair has come out and publicly said recently many times that the Fed is independent. We're not a political agency. We don't make our moves and our decisions based on politics. We make them based on data and policy, is what he says, right? But that tells me something very, very important. And what it tells me is the Fed feels the pressure. The Fed wants to reassure the public. The Fed is trying to communicate something to us. And what they're trying to communicate is we have the power to make our own decisions irregardless of what's happening in politics or with political pressure. Because Donald Trump has come out in the last month or two and said, hey, and made sort of like, jokes or quips that he could get rid of the Fed chair, right, if he wanted to. We don't know if that's possible or not, right? Probably be a lot of litigation if he tried to do it. But the point is this. The Fed is reacting to that. And that's why I think, as I said in the beginning, this is a power trip for the Fed in some ways, not just based on data and policy, but based on them saying to the American people, we're independent. We don't work based on what the president says or this person says, we're independent, right? I think that's one of the main reasons. I think it's one of the main reasons the Fed is not cutting the Fed funds rate right now, right? Trump has publicly demanded rate cuts for the most part and criticized Jerome Powell. But hey, we're at January, March, May, and June, and now July with no rate cuts. Why is that? So is this pause deliberate and focused on power, or is it truly based on data only? Right now, we know this about the Fed. There's internal division. Whenever you have two governors that come out against the majority in the decision to lower or raise the Fed funds rate, you know there's some split, there's some schism going on, at least internally with the Fed. But here's the deal. Jerome Powell's term runs through, I think, May or so of next year, May of 2026. So we'll have to see what happens with the next appointee, right? But Jerome Powell and President Trump, they clearly don't like each other. Did anybody see? Let me know in the comments below if you saw that recent when they got together and did a tour of the Federal Reserve's facilities in Washington, D.C. You had Senator Tim Scott there, you had President Trump there, and you had Jerome Powell, the Fed chair there. And they were all standing right there together talking to the media. Did you notice? Am I the only one? Let me know in the comments below if you noticed. Did you notice how uncomfortable Jerome Powell felt and looked in the presence of Donald Trump? I think personally, let me just tell you this personally. I think Jerome Powell despises President Trump. I think he doesn't like President Trump at all. In no way. You could just tell by the body language, the facial expressions. I think Trump had mentioned something about this project had ballooned up to $3.1 billion. And then Jerome Powell stepped in and stopped him and said, no, what are you looking at? And Trump showed him and Powell looked at it and said, no, you're counting this and you shouldn't be counting this. And look, there's so much tension between those two people. It's crazy. So if you notice that, let me know in the comments below. A lot of tension. They don't like each other one bit. And that's a big issue right now, right? President Trump and some of his administration are saying, look, Jerome Powell, you guys are spending almost $3 billion renovating your offices in D.C., but at the same time, and how fiscally responsible is that move? Why do we have a building being renovated by the Fed for almost $3 billion, right? This is what Trump and his administration is saying to the Fed. So it just adds to the tension that's already there between President Trump and the chair, Jerome Powell. But look, when you got unemployment at 4.1% and you have inflation at about 2.8%, core PCE inflation at about 2.8%, and GDP second quarter, first reading of this year, GDP up 3%, that tells us that the economy is right now fairly solid. We know there's some pockets of issues and problems. We do know that. But at the same time, I also understand where the Fed is coming from because you have this inflation that's real sticky. It hasn't gone down to where they want it to go down. But historically speaking, given everything that's going on, this is an environment for a rate cut. Some people would also argue against the Fed by saying, hey, look, in October, November of last year, right as the presidential race was picking up, you cut rates when the inflation rate was in the late threes, right? It was late 3-something%. You went ahead and cut rates. So if you did it back then, why aren't you doing it now? So, hey, my point is this. What is the Fed not sharing with us? What is the Fed really not saying, or what are they really saying by not saying it? My thing is, most people really are not ready for what may be about to occur based on the Fed. I'm not sure the Fed is telling us everything we need to know as consumers. Because if they are telling us everything we need to know, then the Fed probably should lower the Fed funds rate now. But listen, the Fed is probably going to lower the rate next time in September if all signs remain the same as they are now. But my thing is, let's get prepared. ourselves. Let's not wait around on something big or cataclysmic to happen. Let's prepare now ourselves. And how do we do that? We watch what we spend, keep our debt low or non-existent, get out of debt if you can, primarily bad debt, debt on anything that's not going up in value. Get rid of it, wipe it off your plate, get your emergency funds together. You never know when some type of event could happen. It could be a layoff. It could be something major. It could be another pandemic type deal, right? We just don't know. Stay tuned, right? Be informed so you're not caught off guard. Maybe you want to do some things like some prepping, right? Get you some canned goods. Get you some things to protect yourself in case of, something crazy happening. We just don't know. Listen, anything could be planned, right? And when I say anything, I mean anything. By the far right or the far left, we just don't know. If you could pull off some of the things that I've seen be pulled off in the last 10, 15, 20 years by officials and people in high places in America, anything is possible. That's all I'm telling you is anything is possible. I'm not going to go into more detail than that, but get yourself prepared so you're not on the outside looking in, but you're ready to go in case something crazy goes down. That's all I can tell you. Hey, that's my take on it. Let me know your take in the comment section below. Listen, if you got value from this quick video, smash that like button for me, share the video, and if you're not a subscriber, consider subscribing. I like to keep you guys up to date on what's going on with our economy, and I like to do it in plain language so it's easy to understand. I'll keep you informed. Hey, the best person who's going to take care of the old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.